Hello everyone and welcome to this Bob's Guide webinar. I am Neil Ainger, your Bob's Guide moderator today. So the subject for today's webinar is automating the accounts payable process so that scanning in documents, validating them, standardizing formats and working them into your AP process becomes easy and efficient. By digitally capturing the invoices, you can benefit from real-time retrieval and visibility of invoices as they are captured, validated, matched, and indeed approved for payment. We'll be looking at the potential benefits of outsourcing your AP processes to a third party or installing an internal solution at your corporate, in terms perhaps of introducing more efficiency, less paper, room for manual error, and opportunities for quicker payments, discounts, reverse factoring and so forth. Easing the strain of manual AP will also be addressed today, alongside the working capital management benefits it can offer you and the chance it gives to free up staff to do more value-adding, interesting work. We're very happy to be running the webinar today with our sponsors Bottomline. And we'll be hearing shortly from our speakers, Chris Hopper, who's Head of Product Marketing at Bottomline Technologies, James Richardson, who's Head of Pre-Sales, and also a project scoping expert at Bottomline. And we've got Quintin West, who's an AP automation and document management implementation consultant with them. So the wide-ranging discussion today will give you an overview of AP automation, defining what it is and how it can help, before drilling down into pros and cons. This will be followed by a discussion about practical considerations, including what type of header-level data or live data you want to catch and why. Perhaps you want to ensure you meet compliance obligations or just not drown in useless data. So typical end users from corporates with, say, above 1 billion in revenue down to increasingly popular SME users will be debated in terms of target audiences, alongside the return on investment case and where you can get value. Before we go any further, however, there are a few housekeeping points that I'd like to make. If you have a question to ask our speakers, please go to the box on your screen and simply type it in readiness for the Q&A section at the end. I'll use it at the end of the hour-long webinar today, time permitting. The entire webinar will also be recorded, so if you miss anything or think a colleague would be interested later on, you'll be sent a link to the recording. So without further ado, I'd like to hand over to our first speaker today. Chris, over to you.
Great, thanks Neil. I'd just like to say thank you everybody for joining us this afternoon. This is a really introductory session on AP automation. And what I'd like to do quickly, let the system catch up with me here, is I want to quickly run through the agenda. We're going to start by taking a minute or so to tell you about Bottomline Technologies and where we fit into AP automation solutions. And then we're going to make a quick introductory overview into AP automation, which is going to be followed by a deeper review of the processes and the practical considerations which you need to take into account. And then finally, we're going to round off with an examination of where AP automation adds real value. So let me tell you a little bit about Bottomline. We're a leading global AP automation company who have been implementing AP automation for a large range of companies for many years. As well as producing and implementing systems, over the last 8 years we've gained a great deal of practical experience by running AP automation systems in a service centre. We currently process about 650,000 invoices a month for many blue chip companies. We also provide a wide range of financial solutions and services, and our customer base totals about 10,000 worldwide, including 15 of the top 20 global banks and 400 other commercial and business banks. We also count amongst our customers 85 of the top FTSE 100 companies. The final thing I want to say is that when we talk about Bottomline solutions, our AP automation systems are based on an open architecture. This will allow you to maximise the values you can extract from them. So moving quickly on, let's take this introductory look at AP automation basics. Before we dive into any detail, I want to share some food for thought with you. Now, according to the UK National Invoicing Forum, the UK government currently carries an avoidable cost of between £4 billion and £6 billion a year with paper-based processes. And what we typically see worldwide is that that's reflected by governments all over the world. Okay, but what's concerning in many ways is that governments are ahead of most companies. They put the resource in place and they've started to address this company. And the reason for that is because until recently the cost of AP automation has been too high for many smaller companies and SME companies to actually gain a good ROI from. Now this has changed recently as manufacturers have further productized the solutions, made them easier to roll out and implement, and this has driven down costs, which is allowing the smaller SME and smaller enterprise companies to realize an ROI which basically enables them to invest in this technology. So what exactly does AP automation do? I'm going to read out this slide because it's simple. It's AP automation addresses the full invoice processing life cycle to help organisations overcome the cost, time and errors associated with manual invoice handling. And as you're going to hear today, modern ERP processes are very efficient, but paper-based processes can interrupt them, and time again we see surveys that talk about how much they impact the efficiency. Now AIM has recently carried out some work, and they're saying that introducing paper into these ERP processes can reduce the efficiency of those processes by up to 300%. Now, key to automating an AP system is to capture the paper and electronic invoices in a usable format as quickly and efficiently as possible. And this will give you the best possible visibility and control over your working capital liabilities, where you will start to see a lot of the value being realised. Now, when we speak to customers, we find a lot of reasons that people invest in AP automation. And one thing's clear, it's important to prioritise your outcomes, or the outcomes you want, and allocate your resources accordingly to achieve those goals. So I want to take a look at some of the reasons that people say they invest in AP automation. Now, this slide from Paystream Advisors shows the top 9 reasons that companies invest in these systems. But today I just want to focus on the top 4 because of the limited amount of time available. Now, the first one that always comes out on top is reducing overall costs. Now, we're all under a lot of pressure to do more with less inside AP departments, okay? And cost per processing invoices, or CPI as we often call it, is an important KPI within the AP department. So clearly that's going to be right at the top of the list of the reasons people would want to deploy these systems. Secondly, removing paper from the AP department. Now, we've already touched upon this, and we're going to carry on talking about this as we go through the webinar this afternoon. But one thing is clear, that people want to avoid paper in their AP departments because paper is a real business efficiency killer. And the third and fourth reasons are very closely tied. First of all, increasing the speed at which invoices can be prepared for payment. This is different from paying the invoices earlier, but it gives you control. And what it does is it puts you in control and gives you the opportunities to use your cash more efficiently, a lot of working capital management. It also opens the door to a lot of financial mechanisms within Treasury departments, which can have a lot of effects both on and off the balance sheet. Now, I want to quickly take this poll, and we're kind of interested in what the main reasons that you're interested in AP automation are. I mean, are they to reduce processing costs, remove paper from your AP department, speed up invoice approval processes, improving cash management, reducing lost invoices, or basically give yourself better invoice audit capability? So if I can just pause for about 15 seconds and just give you a chance to answer that would be appreciated. Now, it's interesting looking at the responses, and I'm sure you can all see this on screen. 50% of you are talking about reducing processing costs. 20% are talking about increasing input, speeding up the invoice approval process. And finally, improving cash management, 30%. And that is something we see kind of widely reflected. Interestingly, nobody on the call today is talking about removing paper from your AP processes, which is a little unusual. But on the whole, I think that you're reflecting what we generally see in the marketplace. So I just want to take a closer look at AP automation, and there's many ways that you can look at AP automation workflows. I mean, for the purpose of today, we're going to break the process down into 5 discrete stages, which we'll talk through in more detail later on. But at the moment, let me just introduce them. First of all, capture, collecting your invoices into a single electronic format for further processing. Doesn't matter if they come in as paper or PDF. Now, interestingly, about 70% of invoices which enter organisations come as either paper or PDF invoices. And what's even more interesting is about 50% of those PDF documents that are brought into organisations end up being printed for further processing. Next, we're going to talk about extract, extracting the data from the invoices using OCR and fingerprinting software. Essentially, what we're doing there is we're basically taking the data and we're pulling the data into a processable format. Next, we need to talk about matching, and that is comparing the data from the invoices to purchase orders and GRNs just to make sure those invoices are as expected. The next stage is GL coding, which is tagging the invoices for cost centres to drive approval processes and workflows. And then finally, payment preparation, passing through the processes of workflows, etc., to make sure that those invoices are ready for payment. Like I said, we're going to talk about those in a little bit more detail as we go through today. Now, one of the things we like to do when we talk to our customers is set realistic AP automation goals, because there's an awful lot of smoke and mirrors out there in the marketplace. But what our experience tells us is that when we run AP automation systems, a well-run AP automation system will deliver approaching 50% straight-through processing. Now, what that means is that 50% of the invoices will pass through the system from being scanned to being ready for payment approval without any manual intervention. Now, what we see with those other invoices is we see a dramatic reduction in the amount of work that's required. The systems will typically highlight exceptions where they'll ask for users to confirm information, but what you may see is you may see 1 or 2 fields on those invoices that need a manual inspection. So overall, you see a dramatic reduction in the amount of work that's required to process an invoice. What we also see in our service centres is that a single operator can process approximately 300 invoices per day, which is typically around 3 to 4 times what you would see if you were using a paper-based or manual-based system. Now, I want to talk about when APO automation works best. When does it add the most value? Often there's a combination of circumstances. And if the reason you're implementing AP automation is to enhance your ERP processes, removing paper, etc., then focusing on the degree of integration required is absolutely key to making that happen. If you're looking to process high volumes of invoices, it's really typical that we see a good ROI being achieved when customers are looking to process between 25 and 30,000 plus invoices per year. Now, we also see a lot of customers that simply want to gain visibility and control over their incoming invoices. When they see invoices coming at multiple locations, you may have an office in Manchester, London or Barcelona or whatever, but having centralised visibility and control over those adds an awful lot of value to organisations. And some simply want to close the loop and gain maximum ROI from previously implemented PO systems. AP automation systems and PO systems work very closely hand in hand, and they can really leverage each other to get maximum input. Now, thank you very much for your time, and I want to hand you over to James. Oh, sorry, I do apologise. I've got one poll here. And this poll is simply asking the question, do you operate on multiple locations? It's not going to take very long to answer that question, so give it 5 seconds more and then we'll move on to see how you respond. And since we've got a split right down the middle here, with 50% of you working on individual locations and 50% of you working on multiple locations, which once again is pretty much in line with what we'd expect. And as we go through the presentation, you can see different approaches which are going to be best for you.
Great, thank you, Chris. Good afternoon, everybody. I'm James Richardson. I'm going to be taking you through the next section of the presentation, which is called Practical Considerations. And we're going to spend probably the next 15 minutes or so just talking through some of the items that Chris talked about earlier at a slightly deeper level into some of those components from capture all the way through to approval of payment. I think it's just worth framing as we go into this that AP automation means a lot of things to different people, and whether or not you choose to take the whole piece and challenge with all 5 modules, all 5 components, or whether or not you just choose to take a couple of those components, then that's all okay. That's all part of the AP automation process. So we'll be looking into those in the next few slides. So, interesting poll earlier from this audience when we were asking about what are the drivers. And I think as you're looking around, when you're looking at the project, when you're looking at AP automation and how it will change your AP workflows, I think it's worth just reflecting on what the goal is. What is the overall objective? Is it around reducing the cost of processing? Is it around decreasing that time to approve invoices? There was I think it was about 30% of the audience said that cash management was an important factor, and certainly we see when talking to organisations that this AP automation is absolutely an enabler for more strategic goals and drivers, cash management being one of them, better cash management. But bringing it back to this particular area of the presentation, it's important to reflect on what are the goals and the objectives. And when you start off, and certainly when we work with our customers, we look to complete an existing process review before putting a new system in place. So what does that mean? Practically speaking, that might be whiteboarding how things work today. It may well be evolving that into process maps and process flows. I think it's worth just mentioning that the most successful projects tend to be when people don't just focus on the happy paths of when things all go well, but consideration in time is given to understanding the exceptions. And it's worth mentioning, our experience is we don't just see 1 or 2 exceptions. There are many exceptions that sit within organisations. So, that's all perfectly fine and normal. I think also worth mentioning is the most successful projects are when experts are used as part of that consultation, both internally and externally. So you will have your own experts within your organisation that know and understand your business better than anyone else. Equally, there will be external experts out there that can help you understand what good looks like across your peer group, across other organisations where they may have implemented AP automation previously. And certainly that's where Bottomline gets involved in, is to help give that guidance and consultancy. Bringing it back to this though, it's important to be clear on the objective and the focus and really embrace that project. Embrace and look at how you can improve process efficiencies and removing manual processes where possible. We spend a bit of time thinking about and exploring low-value repetitive tasks like keying and checking, and look at how they can be reduced or even eliminated from the process. And that's all the way from the beginning, whether it's hitting a scan centre or into finance, or all the way through the approval chain up until posting of payments. It's important to recognise that where you want to kind of move to is dealing with management by exception rather than kind of dealing with every single query that comes through. Just deal with the exceptions. That's where people are often better placed. That's where they're more valuable. And as I mentioned earlier, the longer term strategy will come through. If this is looking to work towards working capital optimization, then great. And we'll be spending a little bit of time later on in the presentation talking to that a little bit more. The next piece here is about capture and extraction. And the first thing to mention is this should be regardless of where the documents have originated or what type of documents they are. On the slide here, we're calling out paper, email and portal, where you might get electronic documents coming through. The focus really needs to be around capturing information quickly and accurately, and that has to be the goal of this particular part of the process. Interestingly, when we speak to our customers, those who say that they receive electronic documents They class PDF as an electronic document, which is true. However, the reality of around 70% of those documents that come through in PDF format is that they get printed and essentially pushed through as a paper document in the process. So again, this is part of the reflection on the initial existing process and what you want the new process to be to get the most out of it, and really dealing with paper, true electronic copies of documents as electronic copies of documents, and proper electronic invoices, whether it's EDI or CSV or however you want to do that. Ultimately, you want to get it right up front, and we really focus on this with our customers, is spending the time in getting capture and extraction right, getting it correct right at the very beginning of the process. One of the biggest reasons for that is that it's much more expensive to repair later on within the process, whether it's in the approval chain or even within the ERP. So we focus on getting it right at the beginning. Ultimately though, once it's in, you then have a single process and mechanism for dealing with approvals. Just to talk to the capture piece for a moment in terms of where to capture, there are two very legitimate, and I think we've got an equal split at 50-50 within this audience today, of how organisations, or where organisations capture invoices, whether it's scanning at a desk or scanning centrally, and there's value in both. We tend to see perhaps more of a centralised approach for higher volume, and certainly when we look at deploying solutions on site versus a managed service, then it tends to be the managed service will operate in a more centralized format. But it's okay to work both ways to still enjoy, if you like, the benefits of an AP automation solution. Whether you have multiple sites in different geographies, different languages, it really doesn't matter. It's ultimately about capturing those invoices, both paper and electronic, in different locations or in a central location. We then move on to extraction. So the images have now gone in, the paper has been scanned, and we're now talking about extracting the data. Just like to talk around OCR for a moment for those in the audience that perhaps aren't so familiar with it. OCR is actually called optical character recognition. So OCR is the abbreviation for it. What it actually does, OCR means that rather than having to have people involved in the process to key the information that's on the invoice, the OCR technology is able to read the information that's on the invoice and extract it electronically. So the end result is you don't have to have as many or yes, certainly as many people involved in the process of extraction. So you're removing or significantly reducing people from the keying process. And this is for both paper and electronic. So we've imported the data. We're now talking about the extraction of that data. It's worth mentioning, though, that OCR is only part of a solution. So OCR is great, extracts the information that's on the page, but it needs applying in context. So we use a technology called fingerprinting, which utilizes reference data from other sources, whether it's your ERP system or other business applications, and picks that data out and applies self-learning technologies to identify the key fields that are relevant on invoices and to match them. Whatever you use, though, it needs to be easy administration, especially deploying something that may be complex behind the scenes at a server level. At a user level, this needs to be very simple technology, very easy to administrate, and that's certainly one of the things that Bottomline look to deliver with both deployed solutions and managed services. When you're capturing data, you're then looking at how do you capture? Is it line level capture or is it header level capture? And I'll just spend a moment to talk around the difference between the two. And these are general kind of industry terms that you may well come across as you're looking into these types of solutions. So header level capture is really about extracting key fields that sit on the invoice. Things like the date, the amount, invoice number, tax, value, freight. And there's often kind of 6 to 9 key fields that are seen as header level capture fields. Line level capture is capturing everything that header level does, but in addition, it's capturing the line level items that are listed out on the invoice. And that obviously then goes to towards multiple pages limitlessly. So which should you use? What I would share with you is 9 out of 10 conversations with our customers tend to start with, we absolutely must have line level capture, it's essential. The reality, then going through the process, exploring why they need line level capture, ends up with around 3 in 10 needing line level. So the other 6 out of the 9 that thought they needed it actually don't. So it's important to really understand why you may need it and spend some time exploring that. Ultimately, this is going to be down to your business process and your consumed items. And line level tends to be used for when it benefits downstream processes, goods for resale as an example. But if it's not needed for that, then actually you're better off with header level capture within the process, and you can still achieve straight through processing. So we've captured data using OCR, we've performed either header or line level extraction, and now we're talking about matching data. And when we talk about matching, we're talking about both 2- and 3-way matching, which is against purchase orders, so invoice against the purchase order, and 3-way matching is against the purchase order and against the goods received note. And that's all fine. I think it's worth mentioning that matching is more than that, and verification criteria is more than that. So actually checking that suppliers exist, actually checking to see if there's a duplicate invoice. These things are all really important as part of this matching and verification process. Just to take a step back, it's important to reflect on one of the things that's been mentioned earlier today, which is about really trying to increase straight-through processing rates. And one of the best ways of doing this is obviously having a high or certainly a good PO compliance rule or mandate within your organization. One of the things that can kind of prevent PO matching is when there are insufficient rules around the matching criteria. That means that you throw up a load of exceptions. So some good examples of this that we help organizations through might be to include tolerance levels. So if the invoice value versus the purchase order value is within 5% or within £5 or $5, €5, whatever the right thing is for the organization, then tolerance is also acceptable. Freight, that's often something can just kind of throw the totals because freight often isn't on the purchase order but is on the invoice. So adding things like that and getting some real world experience embedded within your rules will really help drive your straight through processing. Ultimately, this is all about getting confidence in your captured data and matching it to enable better straight through processing. So we've captured the data, and during our verification process, it's worth remembering that this needs to be done not just by looking at one piece of the puzzle, but by looking at other reference points. And certainly for us, what we look to do is we look to reference the supplier database, we look to reference purchase order data, goods received note data, but also for customers may have very specific rules around and logic that they wish to have set up. And this can also really support the verification process. So just going back to what we said a few slides ago, OCR is great because it talks about the capture of the data, but it needs to be understood in context. And this is where the context really happens, is being able to then push through items that perhaps would have, without this additional verification process, may have just fallen through the cracks. Again, all of these things together increase the confidence in processing the invoice. When we talk to GL coding, I think what we mean here, purchase order invoices, straight away, the GL coding is already predefined here, so that already has a path for it to go down. So non-PO invoices What you're talking about here is allocating to the correct cost centre correctly for approval. And what we're able to provide here are tools that enable finance but also business users to approve invoices quickly. And one of the things that we really focus on is removing obstacles from the process. If you think back to one of the drivers that came up across industry, but also with this audience, that need to reduce the time to approve invoices, to get invoices ready to pay or choose to pay earlier, is an important factor. It's in the top 4 of the reports, and it's in the top 3 of this audience. So removing those obstacles and leveraging technology to support the removal of those obstacles is actually really important. We use things like templates occasionally to support the coding of high volume items, and examples might be mobile phone bills or utility bills where things need to be applied to multiple budgets or cost centres. Then the use of a template can be a really great tool to significantly reduce the overhead on time for that. So as we move on through the process, we're now into kind of preparing ready to pay. So we're at the final step before posting for payment. I think, as with all these things, having a good solid process is really important, but having the technology to support that process is what's gonna make the difference between being good and being great. And one of the things that's come up in recent years is the use of mobile technology. Whether you're kind of using web-based solution to approve invoices or interact with invoices is fine, but enabling people outside of finance comes back to the point earlier about removing the obstacles. But enabling people outside of finance to easily approve, reject, add comments to invoices, this is where technology can really help. Whether it's using apps, whether it's using simple kind of latching onto the email systems to approve and reject items. This is all great stuff. The other thing we tend to see is reports, and this comes back to the existing process review and actually what's important in the future. We often find that there's as part of that review, the real value reports come through as to what people actually need and want, and then there's a reflection on. Well, now we've got better visibility of the whole process that's of invoices that are outside of finance. What other reports will help improve that business process? How can we understand how many people outside of finance have got an invoice ready for approve but they've done nothing with for 2 weeks, 2 months? And how can we kind of structure that data so that finance can then kind of be empowered to kind of push that through? The final piece of the puzzle, once everything's approved, is we're then on to upload into the general ledger. So we're talking here about the ERP integration layer. Bottomline have any ERP connection, which means that we're able to integrate with any or multiple business applications to use as source data or push the end of the process items through to. We've also got very tight integration with Microsoft Dynamics AX and JD Edwards, where people can sit within their business application as well as outside of it. And we tend to focus generally around complementing customers' ERP and business applications, not to replace it. That's not the name of the game of this. So having solutions and technology and improved business process that wraps around your ERP is absolutely where we focus our time and attention and help our customers. Okay, we're on to the final section now, and I'm going to pass over to my colleague Quentin.
Thank you, James. Let's take a look at where accounts payable automation delivers value. Of course, each organisation is different, and each of you joining us today on this webinar will have different goals to achieve. Where is the value? As we've discussed already, there are significant efficiency gains to be made from investing or outsourcing the capture of information from supplier invoices, regardless of whether they are received as paper or electronic. However, it's the downstream processing of invoices that really drives the levels of visibility, control and compliance. Being able to 2 or 3 match invoices to enable straight-through processing, providing all matching rules are satisfied, or to provide an exception management workflow that automatically routes invoices to users and groups to code or approve, are key to providing accurate accrual reporting and audit. Knowing where every invoice is in the workflow, who has the invoice to approve or code, puts the AP department in control, and this information can be used to reduce significantly the number of supplier queries. Of course, fast approval of invoices ready for payment in days rather than weeks enables the business to consider early settlement discounts as part of its consideration for supply chain finance. We'll come back to this later in the slides, as this is a key area for turning AP into a profit centre for the business. Let's take a look at the value chain. We've introduced some of the practical efficiency gains in the previous slides and the enablement for finance AP departments and finance to gain control over supplier invoice processing that is often constrained by paper workflows, manual handwritten coding and lack of visibility. Often AP departments do not know anything about an invoice that has entered their business until the supplier calls them demanding payment. This can result in a breakdown of buyer-supplier relationships and the company being placed on stop, affecting the ability to conduct business. The benefits of AP automation can be measured in many ways, and each company is different. However, when considering a business case, there are some very practical considerations. How to drive down costs. Over the next few slides, we will take a look at some of the industry benchmarks that have been gathered and compiled by leading global industry analysts to show the key metrics required to firstly understand your internal cost of processing invoices and what practical steps are required to achieve best-in-class processes and reduce costs. Many analysts focus on the cost of processing a single invoice to the business as an average, and this will vary across business depending on if accounts payable is centralized or not, or dependent on how many invoices are paper versus electronic, how good your purchase order compliance is, etc. What is significant, and this is demonstrated clearly in the graph, those companies that have invested in invoice automation solutions can significantly reduce the internal cost of processing invoices. Whilst the cost of processing an invoice is a key metric, we have to be practical in understanding that it's impossible to eradicate these costs completely. People outside of AP departments are still required to code and approve invoices where there is no purchase order or the invoice has failed a match. Where invoice automation does, however, is to drive down the time it takes for people to interact with systems and continue with their normal job function. For accounts payable departments, invoice automation significantly reduces the manual processes, invoice mismatches, and supplier queries, enabling them to concentrate on more value-added tasks. According to AIM, removing the receipt of paper and paper-driven workflows can increase the processing efficiency of a supplier invoice by up to 300%. This can only be achieved through the eradication of manual processes such as keying information in the ERP or accounting system or systems and sending paper invoices for internal coding and approval. An important consideration for AP automation is to reduce the time it takes to have fully approved invoices ready for payment. If invoices are not ready to pay to terms or beyond, then the company has no ability to negotiate early settlement discounts. This is a key single driver to turning AP departments into a profit centre. Only companies that have processes in place to ensure invoices are fully approved and ready for payment in 10 days or less can maximise the impact of early settlement discounts or reverse factoring. Of course, the impact of invoice automation solutions has a direct impact on AP departments and the need to drive down costs. OCR technology, as discussed, will replace to a large extent manual keying of invoice information, and good purchase order compliance drive higher levels of straight-through processing. Companies that set up shared service centres achieve higher economies of scale through centralised processes and higher levels of control. As companies grow through acquisition or merge, the increase in volumes is handled by the same core staff, again keeping costs under control. Do more with less. We now have a final poll question. This is really centred around the number of volume of invoices being processed a month. So if you'd like to enter your details, we'll just quickly then go through the results. Okay, so we've got quite a mixture there. We've got some at the very high end, the 6,000 to 12,000 invoices per month. That's a very healthy volume. And if that's largely a paper-driven workflow, then I guess there will be significant efficiencies that invoice automation can be applied to there. At the top end, we have a large number of less than 3,000 invoices per month. So that would mean that probably on the bottom end of the volume scale where invoice automation probably is the most efficient solution there, it really comes down to whether the ROI is good enough around that area with that volume, but of course it depends particularly on the company and what they really need to achieve. Okay, taking a look at working capital optimization, let's take a brief look at the enablers for invoice automation that companies can leverage to drive early settlement discounts from the supplier base. Supply chain finance has been around for many years and takes many forms: early settlement discounts, reverse factoring, to name but a few. Companies are looking to improve days payable outstanding, and suppliers are looking to increase days sales outstanding. The next chart slide shows more detail around supply chain finance. So companies that are cash rich have the option to use their own liquidity to fund the discount, or the company could use the bank to fund the settlement for the invoice. Banks providing the factoring pay the supplier on behalf of the company. This is generally termed as reverse factoring. So many banks have actually now set up supply chain finance departments and are keen to provide factoring on behalf of the customer. The customer sends the bank an approved list of invoices to settle with the suppliers. This is obviously only possible with good invoice automation processes in place. So this is really coming back to some of the things that we were just discussing earlier. Unless you're able to process your invoice and have that ready for settlement within 5 days, for example, then it becomes an attractive proposition if you're only settling within half of your terms with your supplier or less. So it's really a key factor that the invoice automation solution enables you to have invoices ready for payment as soon as possible to enable the reverse factoring or dynamic discounting to your supplier. Of course, the suppliers are very keen on this. They like the fact that they get good cash flow. That's what really drives their business. And credit from the banks, rates that are far better than borrowing from the banks. So it's a very deep question and actually requires a lot more time than we have for today. But this really then brings us into our last and final poll question.
Okay, thank you, Quinton. Essentially, what we'd like to ask is, what has prevented you from adopting AP automation in the past? Is it lack of information? Is it because you don't process enough invoices to gain ROI? Is it about system integration, or is it another reason? So let's just take about 5 more seconds to quickly look at that. Okay. And there's an even balance really between don't process enough invoices to gain ROI and issues around system integration. What we typically see out there is that the threshold has come down over the years so that you don't have to process as many invoices as you used to, and a lot of the obstacles about systems integration have been overcome because the degree of productization that has taken place. I don't really have the information on the screen, but because of the amount of time available, I just want to quickly move on. And what I'd like to do is essentially take this opportunity to summarise some of the important takeaways from today's webinar. And first of all, there are many ways in which AP automation can help your business. The early gains are really going to be from improved costs, time and control within the AP department. But as the system matures and you start to get the system working effectively for you, it's going to open up a broader range of business benefits, including enhanced workflows and many opportunities within the Treasury department. The next thing I want to talk about is staging your AP implementation based on your prioritised goals. What you really need to do is focus on capturing the majority of your invoices, not the unusual ones. Focus on where you're going to see the big results which are going to essentially get to your goals. We want to talk about don't let the technology dictate your implementation. There's an awful lot of stuff out there when people talk about AP automation in terms of wonderful things that systems can do. But once again, let's keep track of exactly what your personal goals are, your personal benefits are. It's going to change very much between various companies. Okay, and ultimately only implement the things in the system which are going to give you clear downstream benefits, where you can really measure the return that you're going to get on the investment. And then finally, consider some of the processes which support the AP automation system. And I'm talking about things like, an example would be exception tolerance management and so on. Those things have a great bearing on how well your system will work. Now, what I want to say is, look, thank you very much for your time this afternoon, and I just want to pass you back to Neil for questions.
Okay, well, thank you very much to all the speakers there for a very good presentation. And actually, before we go into the Q&A session, I'm just going to recap the live polls, because it's always great to have some live polls and some audience interaction. So we had the first one there about what's your interest in AP, essentially the driver for adoption, and to cut processing costs was the winner there on 54%. We also had speed up invoice approvals on 18%, and then improve cash management on 27%. The next poll, we had an even split, 50-50, on whether you're working on from multiple locations or individual locations. And then towards the end, we had another couple of polls just looking at how many invoices are processed per month by listeners. And that was quite interesting. We had essentially SMEs and larger corporations as part of the audience there, with just over 60% saying 3,000 invoices processed per month. And then the next largest, 25%, was 6,000 to 12,000 invoices per month. So that's all good. And then finally, we had what prevented adoption of AP automation in the past. Lack of information, 14% was one answer, which hopefully we've addressed today. And then not enough invoices for ROI was 29%, and 43% said system integration. So just a quick recap there of the polls, and thank you very much to the speakers, to Chris, Quinton and James. And now we will move into the Q&A session. So I can see we have several questions already for our speakers, but if you do have a question, please just type it into the box on your console and I'll put it to the panel. We'll try to get through them all today, but obviously if we run out of time, we'll get back to you offline. So basically, the first question, let me find it for you here. Yes, it's basically the first question is asking how much money eliminating paper can really save you. I guess that's an ROI question, Chris, about if it's truly worth capturing digital invoices, and perhaps depends on the size of the company and ERP integration. But Chris, what do you think? How much money can you save by eliminating paper?
That's a tricky question, really, in terms of, you're going to save different amounts of money for different types of people. The main reason that people obviously implement AP automation is to reduce, the cost of processing invoices. And I think if we broaden the question out slightly and sort of say how many people achieve that might add some value. Now, as James already sort of said, the recent market data shows that 32% of managers don't know their cost of processing paper invoices, which in itself speaks to itself. However, there's an awful lot of benchmark data out there in the marketplace. And what we can do is we can compare the cost of processing invoices on paper versus electronically. And what some of this data shows us is that about 18% of companies that process invoices using a paper system manage to get their cost per processing invoices down to under $2, whereas 43% of companies processing their invoices electronically achieve the same sub $2 mark. Now, anecdotally speaking, when we talk to most customers and the results that we see after most implementations, is we see that most customers generally manage to cut their cost of processing invoices by about half.
Okay, all right, interesting. We've got another question coming in here. It's actually quite a simple one about the data capture accuracy and what you're looking to achieve with OCR there. Is that something the panel would like to address? What's the data capture accuracy you're able to achieve with OCR?
Yes, hi, it's Quentin. I'll take that one. So again,
Thanks,
it can vary,
Quentin.
and really depending on the level of information that you want to capture from the invoice, or whether that's header level information or line level information that James talked about as part of his presentation. Generally, what we do say as a rule of thumb, though, that we, with our system, with the fingerprinting, the self-optimization learning process, then we can capture around about sort of 80-85% of the key fields out of the box. And with optimization, that figure can increase to probably towards 90%. Now, of course, OCR is not an exact science. The more documents you can receive electronically rather than paper will obviously improve that. But supplier invoices are notoriously reasonably difficult to process because they're all different. But the sophisticated technology that we have will enable you to capture a very high percentage of data using the defined rules within the OCR software. We also use what we call voting recognition. That's multiple recognition engines that read the same data fields and vote on the accuracy or confidence levels of the characters that have been read. That improves the efficiency of the capture and also reduces what we call false positives. So false positives are characters that may be read but haven't been detected as being incorrect. And therefore they can then enter the workflow where they're more costly then to change and fix those errors downstream. So it's important that the capture side of things, the OCR engine, is as sophisticated as what we offer to get that key data as accurate as possible before it then enters the rest of the downstream process.
Okay. All right. Well, thank you, Quentin. And Michael, I hope that answers your question. We've got another one that's come in here, perhaps for the panel as a whole, this one on third-party data vendors. And basically the question is, how do third-party data vendor solutions impact resiliency and compliance certification? So maybe the panel can address that question. What do you think, guys?
So I think vendor standards will vary, but I can talk about Bottomline standards.
Okay, that'll be fine.
We only contract with third parties who offer a comprehensive due diligence program with security on-site visits and finance and accreditations checks and things like that. So we would recommend that you kind of trust your supplier with carrying out those checks with important sensitive information. So I guess just to Bottomline's piece, we're ISO 27001 accredited. This is the industry accepted standard for security. So we use the same standard, if you like. That is the same standard to provide outsourced banking services to over half of the top 20 worldwide banks. So we kind of pitch ourselves as kind of fairly secure in that way.
Yes, yeah. Well, that's interesting. I mean, perhaps on that point, with the popularity of SaaS in the cloud at the moment, software as a service, I mean, is that encouraging people to use more kind of third-party processes if they're appropriately certified? I mean, do they ask for that certification?
Yeah, I'd say we're seeing a growing demand in that over the last 5 years, probably. So a need for us to present evidence that we've got certification is something that we've invested in as an organisation because we recognise the importance of that. I think when we're looking for working with customers, working with prospects, it's often something that can come up, especially if it's more of a managed service operation rather than perhaps an on-premise software solution. That tends to be the dividing split, that if we're doing work on behalf of customers, then they want to get confidence that we've got a degree of certification beyond perhaps kind of referenceability and kind of proving that we can deal with them as an organisation. So I'd say that tends to come up more, we talk through that with our managed service offering.
Yeah. Okay. All right. Thanks. We've got a question coming in here from Stuart. I'm just looking at now. Perhaps one for the panel. And it's basically they're asking, do you provide a AP workbench for the AP team to monitor the status of invoices and workflows out to appropriate staff? So almost like a little dashboard reporting idea, I guess. But do you provide an AP workbench and things like that, Jens?
Hi, it's Quentin.
Sorry, I'll take this one. Neil, thanks. Yeah, we do. We provide.
Okay, who's speaking? Sorry.
So it's Quentin speaking.
Quentin, hi, Quentin. Please go ahead.
Yeah, so we do provide a set of dashboards that enable AP to monitor all the invoices that are in flow, in the workflow, everything that's been scanned or received electronically. They can monitor exactly what status the invoice is at, who has the invoice, where it needs to go next, how long that individual's had an invoice, the whole invoice aging side of things. So typically, they could use that MI information to target individuals who are maybe not processing invoices efficiently and quickly as possible. So it gives them the complete ability to just monitor every invoice that's within the system and actually to drill down to the individual invoices and even to reassign those invoices to different users. Maybe that particular person's gone on holiday, they haven't set up their out-of-office backup person where invoices would normally flow in their absence. So AP have that visibility and control to redirect invoices to keep them moving and get them approved.
Okay, all right. Well, thank you for answering that one. I think I'm conscious we're just running out of time now, so I think we'll probably just move to a question which I always like to ask, which is kind of really if the panel would like to emphasise any points that they've made, because I've got a question coming from a listener just wanting to know what the key benefit of AP automation is, and perhaps the slide presentation has answered this already, but is there a point that the panel would like to emphasise before we wrap up?
Yeah, hi, it's James here.
Hi, James.
I think just seeing, it was interesting to see the poll, the very last poll that talked about, what's prevented these projects from kicking off before. And I think hopefully what I hope has come across today is that AP automation hasn't got to be the whole thing. It hasn't got to be every single component that we've talked through today. It could be some of the components. So perhaps if you haven't got significantly high invoice volume, and perhaps that may have been a perceived barrier previously, I think it might be worth reassessing to see, there is technology, certainly Bottomline's got technology to support lower invoice volume processing solutions, where you may just in fact take part of the offering but still get value in reducing invoice processing costs and also reducing the time for approval. And we've worked with smaller organisations to help them just focus on specific business cases like that.
Okay, wonderful. Well, James, thank you very much for that. I am conscious we're actually out of time now, so apologies for that, and if we didn't manage to answer your questions, but as I say, this will be available offline. So it just leaves me to thank all of our speakers and the sponsor today, Bottomline, for the discussion, and obviously James Quinting and Chris Hopper. So just to remind you, the recording will be available on Bob's Guide, and to thank you really for attending today. We look forward to welcoming you to another Bob's Guide webinar in the near future. Goodbye.